The average block time for Ethereum blocks has started to creep higher, rising by 5% since April. The difficulty bomb implemented in EIP 4345, specifically to attack miners and implement a poison pill to stop them from forking a failed proof of stake move, is basically what we are looking at, right? The difficulty bomb implemented there has started to be noticeable, with average block time intervals increasing from 13.3 seconds to 14 seconds. It's 0.7 seconds. It's going to get a lot worse, boys. And the reason it's going to get a lot worse is because it's an artificial increase in difficulty on the network. This means that regardless of how many miners are on the network or not on the network, you are going to essentially see a complete destruction of block times on Ethereum. What this is resulting in, of course, is some of the lowest fees we've seen on Ethereum as people move to other platforms already. As the block times get longer and longer, I assume Ethereum could just basically kill themselves off with basically poor operating networks. This is going to get interesting really quick, and I'm excited to be alive and reporting on this as we see one of the biggest, I think, news events that we'll ever see surrounding cryptocurrency as we get closer to the merge or not merge or reversal of it. Who knows, right? I know that Bitsby Trippin is working on talking to Ethereum developers about the problems he sees with proof of stake and I guess delaying the merge and so on. I don't think that's going to happen. I think they're pretty stubborn. Specifically, I think Vitalik is extremely stubborn. We have heard from him that he is fine with block times going to 25 to 30 seconds. And I believe him. If you are in a position where someone you participate with and are in a relationship with tells you something that's going to negatively affect you and straight tells it to your face, I think you should believe him. And I believe Vitalik in this. So, yeah, that's what I think. I think it's coming. But let's get into Terra Snapshot expected this week. Here's how the new Luna will be distributed. If you guys aren't aware, essentially the Terra Luna UST fiasco happened, I guess last week now, or is it week before last? It's hard to keep track these days. We do videos every day and do these live streams every day. But essentially it resulted in the crashing of the stable coin. There was an algorithmic stable coin, as well as a crashing of Luna itself, because that was what was backing the stable coin. They tried to recover by pumping in the backing and moving it from, of course, Terra to Bitcoin to back it. That didn't work out. And now I guess this is the last ditch effort here. The supply of tokens on the new blockchain will be just over 116 million, the developers said. A snapshot of Terra blockchain is expected to take place later this week ahead of the launch of Terra 2.0, a so-called revival of the Terra ecosystem following the implosion of the Terra UST algorithmic stablecoin earlier this month. The revival plan is now moving forward after the conclusion Wednesday of a vote among network validators with a 65% approval rate. Investors who held over 10,000 Luna tokens before UST's implosion will receive the new tokens periodically to prevent immediate selling. Over 30% of their tokens would be unlocked initially, and the remaining 70% would be released over 2 years. New tokens will be distributed after 6 months to such holders. This is what happens when you have a centralized system, maybe using proof of stake as a consensus method, for example. This is what happens, right? Is that now they have to solve a problem, and the only way they can solve the problem is by manipulating the supply. And so they have to take a snapshot, manipulate the supply, and then they have to make sure that they don't dump it too fast on everybody, because they started from a position that was weak. They started from a manipulated position that was never going to be successful in the first place. The only fair distribution method that will ever work is going to be proof of work. This is something that we've talked about plenty of times. Even the proof of stake projects that know how to function and know what they need to get to, if they want to have a fair and open release, go with proof of work initially and then migrate into proof of stake. That is because the only fair way to distribute is proof of work, and that is just a fact. Wallets with more than 1 million Luna or UST prior to UST's depegging from the dollar would have to wait more than a year before receiving any tokens, with a 4-year vesting period thereafter, according to the revival plan. A snapshot, meaning a recording of the state of the blockchain at a specific point in time, will allow Terra to send the newly issued Luna tokens to holders of old Luna. This would, in theory, allow old holders to regain some of their lost investment value while incentivizing usage of the new blockchain. Here's what it will incentivize. Everybody will go ahead and participate in that new blockchain to dump it as you slowly give it to them. Everybody that is looking at buying into this should be extremely careful and extremely cautious. Not financial advice, but I wouldn't touch it with a 10-foot pole ever. That is just the end of story for me, because what you will be seeing is a complete manipulation of the currency by the developers to try to make it look like it is doing well. And they will do this by restricting the amount that they're sending to these holders. And then these holders will, in fact, because they've been hurt by them, will go ahead and dump them as fast as possible. Do not go into the exchanges and buy it off of these people that are trying to recover their losses from a poor investment. You will be not happy. The snapshot for Terra 2.0 is expected on Thursday. Going by block times, the post snapshot block 7,790,000 could happen as soon as May 26, 2022. Terra developers said in a post on Tuesday. The supply at Genesis is considerably lower than anybody is anticipating, closer to 116.7 million, rising to 182 million after 1 year. They added addressing community concerns about a highly inflated Luna supply. Oh, it'll be highly inflated. And they'll be highly deflationary through manipulation, which will just be hiding the inflation, because as we know, anytime you have a managerial class that is controlling any type of currency, they create the inflation. That is the way it functions. And then they try to hide it from everybody participating within that economic system. And that is true for, of course, the US dollar and pretty much any other fiat system as well. In early May, UST lost its peg with the US dollar and fell to as low as 7 cents in the weeks afterwards, causing prices of its related Luna token to drop 99.7% and outflows of over 28 billion US dollars from a Terra-based decentralized finance app. This led to a loss of sentiment among Luna investors and traders, apparently even sparking public outrage in South Korea, where Terra had a huge community. Some crypto funds were hit with billions of dollars in losses. Terra's often brash founder, Do Kwon, came up with a revival plan in the days afterwards, proposing a fork of the blockchain and an airdrop to holders affected by the UST implosion. I want you guys to go all the way back to like 2016, 2017, 2018, and remember that we have never been a fan of airdrops. If the word airdrop is mentioned in any sort of white paper, anywhere, any project, immediately done. I'm not interested. We don't touch it. The plan tries to make the community whole while reviving their trust in Terra ecosystem. A blockchain fork usually refers to the creation of a new blockchain with data from the old blockchain. While this plan may seem like a fork, Terra developers have stated that Terra 2.0 will be an entirely new project and no data from the current chain will be carried on to the new one. No data being carried over to the new one. This is even worse, okay? The reason why this is worse is because now they're just doing a complete new clean slate, and that allows them to completely manipulate the supply, completely manipulate the monetary system from its very base. And that is intentionally done to, of course, try to manipulate the project and the price of the project. That is what's being done here. The revival plan, although passed by Terra's network validators, was pushed live even as results from a preliminary online poll on a hard fork plan found minimal backing among community members. And that is because why? Because the validators will benefit primarily off of this. Once again, that is the large problem with projects like this. The validators will benefit. Nobody else will benefit off of this. The community will not benefit off of this. and they just want to sucker you into purchasing a bunch and supporting it. They will sucker you in initially by allowing you to bring some of your Luna over, and then they will pay you out a little bit over time. And then they'll try to convince you that the price is good by manipulating the supply. And then you will have probably just yet another rug pull or failure. Some 92% of over 6,220 voters on a previously held online poll voted against the change, with the most popular responses calling for no fork as reported. But you know what the problem is? The community can't influence this at all. Damn the man, save the empire. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.